HCLTech has actually reported a strong set of numbers. It is a standout performance, if I may call it. And if I look at the valuations as well, which are premium multiples, it does reflect that as well. But let's now get in. See Vijayakumar, CEO and MD of HCLTech. Vijay, welcome to the show and always a pleasure to speak to you. You know, as we mentioned about the standout performance, does this actually give you visibility when it comes to FY27 looking a tad better than the earlier in terms of growth?
Yeah, it's a little early to call out FY27 kind of numbers. But if you look at some of the leading indicators, we've had very good booking in the last 2 quarters. This quarter, we did a $3 billion booking, and we also called out $1.5 billion ACV. So all of this will translate into revenue momentum into the next year. However, the world is very volatile. There is so much happening. So we're not calling out anything specifically for FY27. We will definitely get back to you in April on that.
Got it. You know, we've seen an impact on the one-time labor cost, new labor codes as well of 956 crores. Are you seeing any further related expenses in the fourth quarter or in the subsequent financial year, or is this just going to be one time?
Of course, this is a one-time cost related to some of the gratuity and leave encashment categories. In the future, we see some minimal impact. As we called out yesterday, we think it's between 10 to 20 basis points kind of impact on an ongoing basis.
Now, in terms of the margins as well, what is that sustainable profile going to look like? I know you've given the guidance when it comes to FY26, but if you have to look at the wage hikes coming in, increased investments in AI, and you have AI-led cost savings also that will come in, because I think you're targeting over 30% cost savings through AI for your top clients as well. So if you have to bundle all of this up, what's the trajectory pointing towards? Any crunch in terms of margins in the, I mean, maybe you can't give me a number right now, but do you see some squeeze there?
Our long-term playbook has been delivered stable profitability, but industry-leading growth, and that's really been the playbook. And of course, we've been always between 18 to 19 for the last few years. This year, due to the one-time costs, we've reduced it to 17 to 18. And we feel very confident of getting back to 18 to 19 in the next year.
Okay, so 18 to 19 is what you should be looking at. And when you talk about headcount and attrition, attrition has improved, headcount has been flat sequentially. So how are you looking to manage the workforce capacity with the strong demand that has been indicated with the high deal wins? What are your hiring targets looking like?
Yeah, so we hired, our net addition was, in the prior quarter, we had a good net addition. And this quarter, we have not added. There's a marginal decline in the total people count. But we also have some headroom in the utilization in a couple of our businesses. So I think this will help us to deliver the growth in the coming quarter in services. And of course, we will continue to hire in this quarter as well, which will help us to deliver growth in Q1.
Okay, and what about discretionary spending? Because the delays in traditional transformation projects is noted. So the expectation for a recovery in discretionary spending across different verticals, if you have to look at it that way in the next 12 to 18 months, what does that look like?
Yeah, I think there are traditional areas of discretionary spend like SaaS implementation and some of this modernization type of work, which I think is definitely slow, and we don't see that immediately picking up. And clients' priorities have changed on how will they leverage AI to really transform their overall business processes. So, of course, there is good discretionary spend in data and AI, cloud modernization. And of course, there are a lot of work leading to enable AI, like AI data centers, edge infrastructure, some work on custom silicon. So these are the newer areas of AI-related spend, and that's where we are focused on. And that's where you will see a very strong momentum in our tech vertical, which has grown 15%, I mean, approximately 14.4% year on year.
Yeah, I mean, and the advanced AI services revenue is around 20%? On a sequential basis. So what's that roadmap for scaling this business, and what percentage of the total revenues is AI expected to contribute if you have to look at, say, another 12 to 18 months?
So See, there is a difference between what AI and what we are calling advanced AI. We think
Okay.
AI will be across our portfolio in a matter of 2 years. Pretty much everything that we do will have a significant influence of AI, and even a lot of application modernization will be driven by AI. But what we are calling out as advanced AI is some of the spend which is really required to build the AI foundations, like cognitive infrastructure, AI data centers, professional services, the specialized semiconductors that we are designing, some of the agentic solutions we are building, some of the IP that we are building. So this is what we call out as advanced AI. But otherwise, AI will start becoming a significant part of our portfolio.
Okay. And if you have to look at the kind of deal pipelines that you have, now the new deal wins, the TCV was an exceptional number in the third quarter with what, $3 billion. How does the current deal pipeline and the deal conversion cycle look like if you have to look at 2026 as a calendar year? And what is that, proportion of mega deals that you're expecting?
Yeah, in 2025, we clocked in $10.5 billion of net new deal wins. Does not include renewals and rate cards. So we obviously expect this to go up in the next year, and we have a strong pipeline. However, from a quarter to quarter, there can always be some fluctuations in the net new deal wins. But if you take any moving average 4 quarter, 2 quarter, or a full year basis, we think our deal wins will continue to increase.
Okay, so deal wins could continue to increase as well. Vijaya, my last question coming to you is, we're talking about everything that can work really well. Tell me 3 points as a company, as an industry, that you would be watching out for that could be major risks in 2026 that investors should also keep an eye on.
I think these are not secrets. I think geopolitics is definitely one of the risk aspects. I think the second aspect is how do we get the top-notch AI skills, both training and hiring. I think industry is going to will have to really work hard in getting the top-notch AI skills, especially to really deliver certain work which is cutting edge in the space of AI. I think these are the two. And of course, cybersecurity is always a big risk across all industries in today's world.
Multiple areas, where you have HCLTech, which is focusing on as well, and there could be something better that could be on the cards, as the management is indicating.